Financial markets are really complex. That's why we need a bit of a cheat sheet to understand how the markets are going. Are they getting stronger? Are they getting weaker? You could be trading a lot of different financial instruments, gold, copper, silver, Bitcoin. It doesn't really matter what you're trading. That financial instrument cannot be isolated from the financial market orchestra. In this video, we're going to check out the risk-on or risk-off sectors of the cheat sheet, row 1 and row 2. Now, why do we care about this? If we want to see if Bitcoin, and of course, if Bitcoin is going up, the rest of the crypto market is following. Conversely, if the major stock market indexes are going up because risk-on is coming back into the market, that will affect individual stocks. If there's geopolitical uncertainty, we would expect the VIX to rise, junk bonds to fall, and gold to get a bump. It's also very important to look into the 10-year and the 2-year yields. Sudden spikes in the yields typically bring down the main markets and, of course, crypto. Crypto is incredibly risk sensitive. As traders and investors, we need to time the market. It's not just time in the market, it's timing the market. For example, if you buy around the top, by the time you get a retracement, it could push you out of the market before it goes higher. If you've ever bought at the top and sold at the bottom, please leave. I know what you're talking about in the comments. Let's do a bit of a deep dive using the paths from the service. We're going to specifically focus on row 1 and row 2 and then bleed this back into Bitcoin to understand if it's risk on or risk off. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome and welcome back, CTKS family. My goal is to help you to decode financial markets, to understand are they going up or are they coming down? And the cheat sheet to mastering price action is your best way to understand for yourself. You can download it completely free from CTKSMethod.org. Now let's get into that analysis. The vast majority of traders and investors only look at the chart that they put money into or the chart that they're trading. This is a huge mistake because all charts are intercorrelated and interconnected. Now, when we look at the VIX, which is the first cab off the rank on row 1, what is the VIX? The VIX is basically the fear gauge of the S&P 500. If the VIX is coming up, the S&P 500 is coming down. But of course, the VIX is a little bit more than that. The VIX is the fear gauge. The fear gauge, when it comes up, guess what that means? People are fearful. And thank you for all the people who reached out in yesterday's typo. Boy, oh boy, was that funny. At the start of the month, the fear was coming out of the market. We got a bit of a blip out, but the fear was coming down. That meant the markets were rallying. Now, around the 10th, fear started to come back into the market from the 10th to the 14th. It's now starting to recede again, but there are elevated levels of fear inside the market and we've left the negative path. More fear, suppression of price. The interrelationships between the DXY and different stocks, commodities, and crypto is a really interesting one. It tends to change around, but the on-average thought is if the DXY or the US dollar currency index is coming up, that basically means things are getting more expensive to buy. Less money, less demand. Same supply, therefore falling prices. So when we see something like this, note this structural collision around the 98,600 mark. This structural collision is just meaning this level of structure is so strong, it's rejecting the DXY. This downward price momentum right here inside the DXY will be driving the euro dollar up, the Aussie dollar up, and dollar yen will be coming down as well. This is a structural collision, and structural collisions are really important to understand. Now, what does this mean to stocks and also crypto? With the DXY coming down, many people will just automatically assume risk-on assets are going to go for it. It's a little bit more complex than that, but it's a good starting point. Dollar yen was following the normalized positive price path from the service and has done that structural rejection as well. This is not surprising. If the DXY is structurally rejecting, we expect dollar yen to do the same. All charts are intercorrelated and interconnected. When looking at the US 10-year and the US 2-year, if the yields are going up, that's typically very, very bad for the stock market and also for crypto. Now, why is this the case? The US 10-year and the US 2-year are basically the cost of money. If the cost of money is coming up, guess what? It's getting more expensive to get money, and therefore there is less of it around. It's kind of like the DXY, but just from a different perspective. So when we see the DXY coming down and also the 10-year coming down, we expect the 2-year to be coming down as well. In fact, this month the 2-year has been particularly weak. Now, this reduction in the 10-year yield is actually a really good sign. It's very supportive of upward price momentum. Keeping your eye on the yields for structural spiking is really, really important. As I was mentioning before, the 2-year has been a little bit weak. It was following the normalized positive price path, but has been decaying, just like the 10-year. And we can detect that the DXY is getting weaker. Dollar yen is getting weaker as well, which means the euro dollar and the Aussie dollar are getting stronger. Please let me know, what do you think will happen to the main markets? Will they go up, flat, or down? Please leave your comment. Just can be one word, up or flat or down. And if you would like to learn more about CTKS structure, please check out the video Price Action Masterclass. The link is in the description of this video. US oil was at a key pivot point here. It was potentially going to go for it, but it has actually declined. So we're seeing a bit of a story. From around the 14th onward, the risk on is coming into the market. US oil can be a really interesting chart because typically when US oil is going up or when oil is going up, it's kind of like gold. It's a geopolitical tension idea, but it's also an advanced economy engine idea as well. That is, oil up, engine of the economy, the economic system looking good, but not too much. Don't rev that baby too much or things fall apart. So looking into row 1, which is the primary risk row, we can see that the VIX has had a little bit of a bump. The DXY and dollar yen are coming down, the yields are getting weaker. We would expect these four to move together. The commodity of oil is also decreasing. It's early days yet, but this is giving us an idea that risk is a little bit up and down at the moment. This can cause a consolidation action, but there is a bias to the upside for risk. If you're trading Forex with the CTKS method, please let me know what pairs are you trading, so I can focus a little bit more on helping you out in future videos. And if you know other Forex traders and they're not using the CTKS method, perhaps share this video with them. I think they would gain a lot of value from it. Now let's have a look at row 2, which is junk bonds, the euro dollar and the Aussie dollar, gold, silver and copper. And then we're going to fly into Bitcoin and check it out. All investors become traders anytime they buy or sell, so it's very important to know what you're looking at and also to know how the markets intercorrelate and interconnect. Your financial future literally depends on it. Looking at junk bonds, which we can see is basically the inversion of the VIX, we saw junk bonds getting fairly strong at the start of the month but then decaying. Over the past couple of days, or over the past 4 to 5 days, it's actually increased in value. This is signaling risk on. It's a bit of a lag with junk bonds, but junk bonds are impacted by the US 2, the US 10, as well as the VIX. It's a little bit more complex than just the inversion of the VIX. Now, what does this mean to us? It's really positive. It means the upward price potential is there. The euro dollar was following the normalized negative price path. It had a structural interaction here around that 115.95 mark and has found structural support and has bounced. This is literally a trend change, so you must be aware of the ramifications of this. What does this mean? It means that the DXY is breaking down. Things are getting cheaper. And when things get cheaper, what do people do? They buy more. The Aussie dollar was following the normalized negative price path and still is, but it is likely to break from that and go at least to consolidation. Why is this the case? Because the euro dollar is showing strength, the DXY and dollar yen are coming down. Gold is a really important metal to keep your eye on. Gold was looking like it was trying to go positive but went under the consolidation and has now got a bit of kick in its step. Why? DXY down, US2, US10, Euro up, Aussie dollar up, it all goes in this direction. So therefore, we can say that this strength should bleed into the crypto market. That is, continued gold momentum is good for crypto. What is crypto? What is Bitcoin looked at? Digital gold. Looking into silver, silver had a hell of a spike, normalized and is back on the positive price path. Inside the service, you get all these paths projected out for the month. This path is not changed. I have not fitted this to price. And people inside the service already know this. And anybody inside the community also knows it. What we do is that we draw the price paths at the start of the month with level 2 standard certification. Now, these lines are not random. They're structurally based and biased. The fact that silver is going positive is very good for risk on. The commodities going up is a particularly good thing. We're in a commodity super cycle at the current time. When we look at copper, Dr. Copper, what's Dr. Copper saying about the health of the economic system? He says, the report is in. Well done. Everything is looking good. You passed the test. And a very interesting thing, around here, of course, the paths came out after this particular spike in copper. But you notice that normalization back to the positive price path. That is exactly what we would anticipate and exactly why I drew the paths in this fashion. A lot of time people think that the path should explode to meet price. No, it should be reflective of structure. Now, why is this the case? Because these level 2 standards paths are really about the end of month price. We're at the 22nd right now. Of course, the service members have the paths to the end of the month. J-Link in yesterday's video had a really good comment. The way price action follows this month's price path is uncanny. Of course, J-Link was talking about Bitcoin and talking about strategy, which I always want to call Michael strategy or micro strategy. The paths are there to help you to understand the process of normalization, and copper is a really good one to show this. If you're liking the video so far, please smash that like button and don't forget to subscribe and hit that bell notification icon so you don't miss an edge in these markets. We talk about things here that will not be discussed on any other channel. And if you know anybody that could benefit from the CTKS method, please share the video with them. Okay, let's get back to it. Therefore, looking across row 1 and row 2, it is not surprising that we've seen Bitcoin do a bit of a good bullish candle here. You can think of Bitcoin as digital gold. It's starting to inherit not only the stock market risk on and risk off idea, but a digital commodity idea as well. And thank you to Levon. Levon on X yesterday, I want to say Twitter, said, holy smokes, my brother is learning CTKS method. He turned 77 into 107 over the weekend, scalping Bitcoin at spot. Levon was very proud of him, and I'm also proud of your brother. Well done. That's awesome. TechDev had a really interesting post on X, and I retweeted that and I wanted to share it with you right here. TechDev is basically saying, hey, look, you know, this thing and this thing, it's not exactly that thing would be there, that's better, and this thing would be, yeah, kind of a little bit across. But look at this story from the chart. Hey, baby, this has got a lot of room to move up. It's a good story. It's important to know the sentiment on social media. So if we look at Bitcoin at the current time, we can see that we're doing fairly well here. But it looked a little bit different in yesterday's price action. This is on a daily basis. Let's just zip down. In yesterday's video, I popped on the CTKS path all the way to the end of the month. That's the first time I've ever revealed the end of month price. So when we look at Bitcoin, we are actually anticipating an upward leg. But we're not blind about what we're doing. We'll get an upward leg if the VIX comes down, the DXY comes down, the US2, the US10. That's what we want to see. If the commodities are breaking out, that's a good thing. Gold and silver going up, copper going up, fantastic. Euro dollar going up, Aussie dollar going up, excellent. Junk bonds going up, even better. Don't forget, everything moves in a wave. Everything is always coming up and down. And you can see it all the time in any price chart. It's always up and down, up and down. It's all over the place. But it's always going up and down because of structure. Literally, what I expose each and every day is the underpinning architecture of the markets. And if you like that kind of stuff, please make sure that you like and subscribe this video. Let's go for 100 likes this video. And please share this video out to your friends as well. If you know anybody who's trading and investing, and of course, all investors become traders anytime they buy or sell. The problem with investing is people are called in on positive narratives and then it goes the other way and then they say, oh God, I got it wrong. I need to sell. Why? Because they go all in and more at one particular point of time, and then by the time that prices come down and naturally just interacted with structure, as we just point out with the charts, they unfortunately sell at or near the bottom. This is really normal, and just remember what happened with a lot of charts. They will spike up only to decay back and then start to normalize. It takes a long time to learn how to understand structure, but I help you each and every month inside the service. And of course, I help you free on the daily channel as well. So when we look at Bitcoin, what are we seeing? We want a confluence of factors to go in our favor, and we're already seeing the starting signs of that. The fact that the DXY and the yields are coming down should create some explosive action in Bitcoin, but we're not mindless how we buy. We buy structurally. And where is the structure you speak so much about? Well, that's inside the structural indicator. I'll zoom into a lower time frame and we'll look at it. Okay, welcome to the 15-minute on Bitcoin. Now, what we're seeing here is this up and down structural action. And of course, Bitcoin is impacted by all of the other charts. Bitcoin is the most risk-sensitive asset class in existence. That's why you need the cheat sheet. You need it. I know a lot of people do projections just based on Bitcoin's chart, but this is a little bit naive. Why? Because Bitcoin is part of an ecosystem. And one thing to just realize, when you get a wick like this candle looks really good after it's printed, but when the candle is printed, it is fully red all the way down to that bottom. Now, what caused that bottom and that bottom? In order to understand these things, we must look from a structural perspective. We can see that the key level of structure has remained around the $118,000 mark. This was a very, very important level of structure, and we knew it ahead of time. We knew it at the start of the month. CTKS literally gives you superpowers. You already know where price can interact. I was saying a couple of episodes ago that when we were back here, if we come down under this structure, we have a lot of structural safety nets that will kick in. What we've seen is these structural lower levels have really supported the buyers. They've been very strongly defended, and we expected strong defense around the 118,000 mark, and we got it. Now, why do we even need to look at lower levels of structure? Can't we just zoom out and just do a mega view? Not really. Because if we don't know where the structure is, if we don't get above it, we're not going higher. In other words, you need to keep a daily pulse on your structure. It is vitally important. Now, what could happen to Bitcoin from here? Well, let's check it out. What's the next level of structure that we need to have a look at? It's around this $121,000 level. So you can see right now there are structural resistance overhead, but most of the structural support is underneath. This is really, really good. And if you look at yesterday's video, you'll understand exactly how good it could get. And you can know this ahead of time. And if, for example, it's around the 23rd of the month right now, if you wanted to know it at the start of the month, you would have known so inside the service. Keeping our three-dimensional thinking really solid is very, very important. That's why the paths are so valuable. When people get really certain, they tend to get under-leveraged, either leverage long or short. And what we can see is that $463 million worth of liquidations across 145,000 positions were taken in the past 24 hours. Don't get so certain on things. Price is always moving in a wave. So many people were saying, Ether's just going to the moon. Yeah, the longs just got hit. But of course, with Bitcoin starting to gain positive momentum, that momentum will transfer back into the alts. But always remember, I do this all the time. Look at this little squiggly line. That's price. Now, what is that actually saying to you? It's saying up and down, up and down. Typically, people, when they enter the market, they will enter with certainty, only to be whacked out of their positions, especially if they go with leverage. Another way to explain this is Rule 887. Maximum certainty is maximum risk. Just remember, price is always moving up and down between structural levels. If you know the structure, you have the certainty. Put another way, structure is certainty. If you know where the structural levels are, you know where the bookends are on the bookshelf of price. When you understand the hidden architecture of the charts through CTKS structure, you'll find you don't need certainty. You just need your strategy to profit from uncertainty, and that strategy is always structure. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.